Good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for March 31st, 2023. Before we started, I was talking to the fellows about the explorations in artificial intelligence that I've been conducting and its ability to synthesize and produce good staff work. So what I'm working on is a project to take all of my writing of all my FAQs from all the workshops and then the several thousand hours of live trading workshops and research weekends and coaching sessions that we've done, turn that all into text, and then have Chat GPT-4 synthesize that, identify contradictions or unclarities to help me improve the logical consistency, and then have my son program a chat bot that will take questions from the world and construct an answer out of my body of knowledge that I can then check before we release it to the people. And then if I like the answer, it'll go into the body of knowledge and then upgrade that so I'll get some human feedback to improve the answer. And I'm hoping that will become a tireless, efficient, loyal, trustworthy teaching assistant. Yeah, Dan, exactly. What I do is I put one of our transcripts. I converted one of our creativity coaching sessions where I was doing some lecturing and stuff like that. I had it convert my spoken word into a PDF and then had it summarize and clarify the PDF, and it was better and grammatically correct. So you know exactly what I'm talking about there. I'm going to essentially develop the ultimate teaching assistant robot for professors anywhere in the world. And I'll keep you posted on that. That's going to be pretty good. I mean, my problem right now is that the FAQs from the workshops are so large that it almost is too hard for the students to find their particular answer in between all of the different explanations over the different cohorts. Because the FAQs are organized by the cohorts as they went through the course. And so it's unwieldy right now and not fair to the students. But then it's also not a good use of my time to re-answer questions that have already been asked. So this is now a clear light on a difficult problem that I've been enduring. So I'm very excited about doing this for the subscribers, for the Patreon, and to give that as a tool for our use. It also is going to have pretty powerful implications for the military officers I teach and individual commanders and then professors around the world. So I'm pretty excited. Well, let's go ahead and I'll keep you posted on it. Let's go ahead and move on into the work. So we'll start with the portfolio review for the swing trade portfolio. Let me get us dialed in here. 30 minutes. And we'll start with Alcoa. There we go. So yesterday, you will recall that because we were so near the previous peaks where things had rolled over on the previous cycle, I elected to take a lot of exits on trades that look like this, and then Alcoa after the exit, after it was decaying, dropped down into here, and then today it got back to that level and then kind of leveled off. I did not trade it, and I am not in that position, but I am prepared to see how it will go next week. I think there's a real good chance of initial breakouts because today's move was so strong in the market and across so many sectors that my expectation is there's going to be a lot of early movers, and it may be a big gap up on Monday, so we got to be very careful not to get out over our ski. So anyway, no trade in Alcoa, and perfectly satisfied with yesterday's exit and no overnight risk over the weekend. Caterpillar, on the other hand, did show signs of life early in the form of a morning hook, and I was willing to take that one, and it closed very strongly at the top, and we're holding 1, 2, +2 on the standard risk, which I set below the PSAR because that's the first price that tells me this long side move might have broken. So that becomes my 1R based on the technical signal. Now, that was a little smaller. This risk is smaller than these previous risks, but part of that had to do with the fact that I could have a smaller risk box and still have that equal to 1R, and it's manageable. So that's a case where the chart helped me refine the size of the risk box. Cliff, yesterday's exit, no trade today. Today closed the trade we started yesterday in CVS, and it started decaying, and I was close to the no lose plus dinner for 2, so I just took that at a plus 0.3 and no overnight risk, and that actually helped me from letting that thing go into negative territory. So we took the 0.3, and we're happy to do so. I actually think that has some chances for some downside continuation tomorrow because this was a pretty strong rollover on a day when the market did this and closed very well. So that's a sign of weakness ahead that I'm going to be prepared for. The Dow, I didn't have a position in it, but you can see that was just a long train running and closed up near the high of the day. That is a very solid position. So this was yesterday's chart on the Godzilla. Dish was the only Godzilla. And we talked about this yesterday, that this was the move that gave us some confidence. Yesterday it closed here. It was still a Godzilla. And then today, morning hook, PSAR flip. I said, let me take the Godzilla swing on the 30-minute standard risk. And it closed with 1R in hand. And I like the fact that it's above the previous peak. And now I think there's a really good chance of it getting to the top of the dragon or the RL10 peak. So those two are targets 1 and 2 starting Monday. And if it gets above, say, 980, that's a clear indication that it's going to go. And this thing has a long way to go to recover as a Godzilla from all of that harsh sell-off. I mean, this is a move potentially that could recover all the way back up into 12 or 11 and a half. And if it just breaks out of here, it's got all that move to make. And then I would just identify these as intermediate targets along the way where I wouldn't be surprised to see it reach and start to fail, in which case I would exit it. But I like how it's gotten started here, and we're holding an R in hand. And that's what a Godzilla looks like as it tentatively leaves the station. I like the fact that this had rising lows, that we had a surge, a pullback, and that the recovery began with a higher low, and that's a clear K2 entry. Check or hold. So this is all about framing and fractals. Devon Energy. This is one that, again, I'm outside the trade wishing I was in. I never felt the burning urgency in any of these moves to work, and today's move happened so fast that I didn't have time to get in, span of control. Then all it did was stay flat. So this is one where I'll be prepared to take the long, but I'll also be prepared to take the short intraday. And then if it violates below the PSAR here, I would make this a swing to the downside and targeting probably here and then here and finally down to here. So that's my scheme for Monday. Electronic Arts, this was one of those we cast yesterday to make the 1, 2, 3R gain. It stabilized today and then continued, so I put the trade back on. and it gave us a chance to hold 3R on a really strong move. This is another one that was a Godzilla way back when. So if we look at this, just if we go back in time, yeah, this was the Godzilla move that was triggered by that harsh sell-off. And you can see that we've been trying the trade on this thing as a Godzilla all the way, and it was right about here that it finally got the traction and went. And then it pulled back and gave us a Kata 2 here and here. So this one now feels like it has cleared all of this support that's been established, and now it has nothing but a gap to cover. There's no price in here that makes a guy want to sell. If he owns it already, there's nothing in here that makes him want to sell until he gets his money back way back here. So this is really free and clear philosophically. And we've got 3R in hand of markets money. That gives us a little bit of insulation and ready to play that on the longer term charts now on a daily basis. So this feels pretty good. That's the Godzilla when he works in your favor and becomes part of the team. This is, let's see, let's get to the 30 minutes. Where are we at there? Yeah. Just as a point of reference. So that's today's price action. So today I took the, this is emerging markets. We had that gap and go, and this had this much time to make a continuation, and it didn't. And as the PSAR came into the station, this felt like it had run its course. And so we took +4 out of that off of 1 unit of risk. Very satisfied with an orderly trade in emerging markets. Ethereum, this is one that I missed today. Or ETHE, we can only go long on that one, and the indication was here, and that's the one I missed, and it ran up and closed very well around 857. That's making the original swing entry of 5 and 5.5 feeling pretty good in a longer term account. I'm liking that one. This is poised though with the rest of the crypto world to really make a nice move as it shakes off the FTX debacle. Yesterday we closed the Mexico triple entry and closed that in here. Today there was a quick surge up and then closed weekly. So this feels like a really proper exit in retrospect. Felt pretty good and no risk over the weekend. Brazil, yesterday's exit also feels pretty good from that trade. It was even weaker than Mexico. So on weakness in here, I'm ready to get short. On strength, I'm ready to get long on the PSAR break and then add a position if it gets above the 10-day high. If this inherits some of the goodwill from today's strong U.S. markets, then I'll be on the lookout for that. Intel. So this was the trade. This was like 16R or something like that. See yesterday's, and that was the exit. And today it showed nothing to the downside at all, but started to resume. So I put one position back on, and it closed pretty well. And so we're holding +1 on. And then if it breaks above 33, I'm going to add a double position on it because tech is leading the way and Intel is recovering strongly. So that one felt like it was properly managed. International paper and industrial. So there was the short, and I was suffering because I couldn't get those. Today, it gapped up and had a morning hook, so I just held my nose and put that trade on, and it closed pretty well, and that's holding +1, and that feels like it could go. So I'm going to try to convert that to a day chart at some point. IWR, the same thing. This is another one of those where this whole move had been regretting. Today it gapped up, had a little morning hook and go, and took the chance to put it on, and it closed with +2 in hand. And if it breaks above the 10-day high, I will consider adding another position. That feels very good. KRE, this is the regional banks. They did not participate in the upward move. I'm happy with the exit on the short we took yesterday. This feels important because it didn't fail further. There wasn't a lot of interest in buying them, but that suggests to me that maybe the pain and suffering is over and it's just a regular asset class. I missed the marijuana 2-day move here, so we had this long. Feel really good about that PSAR exit. Didn't take it yesterday. Span of control, I couldn't get this one. But if this falls below 569, that has a real possibility. To get on the long side, I think I want to see it above about 580 and use that as the risk box. That one bears watching. Clean energy. This was one of those where we got way out in front of our skis and used markets money to pile on, and then got out of it just in time to miss the gap up. Now yesterday that stabilized and went nowhere. Today it gapped up and continued, so put the trade back on, and it closed pretty well, holding +2. Like that one. And it's well clear of any resistance. There's no resistance here at all. It's up and away, if I can say it that way. Rivian. This is one where saw the continuation this morning. Put the standard risk on with the PSAR as the box, and it ran up and closed pretty well, and that's holding about +3. And that's going to attract some attention. I'm really expecting that to get hit with buying pressure on Monday. And if we go out a little bit, that still has a long way to go to get back to some previous support levels and resistance levels. So I like, in my view, this has cleared all of that bottoming support level, and that this was really an indication of upward pressure. So I will reinforce a breakout of the 10-day high with another position, but I won't let it go negative. So there's a 3R buffer that's in there. This is the S&P. It had a very strong day, so I'm just looking at that for market condition. Treasuries was the interesting one to me today. So yesterday we got we took the COTA 2 after the SS. This was the exit on the short. Didn't play it long, so I waited for a COTA 2 on standard risk. And today, Treasuries just took off. So at the 2R level, we put the second position on, and it closed very well. And I'm going to, if at the first sign of it continuing, I'm going to drop down to 3 minutes, and hopefully this thing will get through resistance and really go. But if it starts to fail, I'm going to get out of that pretty quick on a 3-minute chart signal. So Treasuries on a nice move. Tesla was my focus stock today. This was our 2-position exit for safety yesterday. It continued the strength, and the market was good. Morning, the first initial trade, the 2R battle drill, another 2R battle drill, and closed right at the top at the 10-day high, and there's the 30-day high, and it's above the key price level of 200. So this, I like having 3 positions in hand with 1, 2, 3, 4R on the first one, 2R on the second one, 1R on the third one. So we're holding 7R and a three position, three scoop position on the swing. So that feels pretty good. That'll be a focus on Monday morning. And then this was the exit finally on U.S. Steel. That was the exit yesterday. Today it just went sideways, nothing. So I'll be looking at this as the zero state right here. I'll be ready to go long or short from there on the basis of price action with one of our old reliables. So that was a very good close to this week of pretty good swing trading, I have to say. And I'm going to write up the stats for the month of March, and they're going to look pretty darn good, especially. And then when you compare really good month in February and a continuation into March, I think it makes a pretty compelling case for this style of hybrid swing trading that is using the 30-minute chart. It can dial down to the 3-minute or dial up to the daily as needed. I think it's a nice intermediate time frame that gives you plenty of time to manage, more symbols in your span of control than, the urgency that you get from day trading on 3-minute. So just offer that to you as a thought experiment. These are the new holdings in ETF2. Let me get to the sniper trade of the day. Yeah, just forgot to put the filter on it. Sorry. Hang with me here for a moment. Yeah, so this was this is Intel 3 minutes. This was the close yesterday. This was the opening range 3, big time gap and gyrations, and then it finally broke out of that here, and that's the standard risk box. The standard risk box is half the size of the opening range 3. That's how volatile this was. So don't you don't got to be in a big hurry. This thing took off right away. I only got the one position in it, and it gave about a 1.5 R. So that's about 1.5. After that peak, I took it right at the edge of the dragon. So here's the upper skin of the dragon. So after that explosive move and then it fails, I like to cut it right at the edge of the dragon. I don't want it to come back to the PSAR, and it saves that much in my favor. Check or hold. Caught a 2 re-entry. You could just feel that, the air leaving the balloon on that one. So about 1R. Thought about the short, but it gave me a Kata 2 instead for about another R. Kata 2, scratch, SSC, and scratch, and that was it for the day. So Intel gave us about 1.5 plus 1 plus 1, a scratch and a scratch. That's about a 3.5 on the intraday turbo for Intel. And that also funded the Intel swing on the 30-minute, which was putting the one position back on, as I briefed earlier. Okay. Let's take a look at the traders here. Excuse me. Agnieszka on Tesla on the 5 minute. Here's like that OR5, if you will. Nails it. Has a wrist box right there. And 3R. Like, what are your questions? The 2R battle drill would probably have been like right around in here. Nothing wrong with that one. That would have added an extra R. But boy, that's just as... That's textbook right there. Train left the station carrying a heavy load. That pattern and the way that it held that support level without even hinting at failing is why I'm glad to have 3 positions in hand on the swing and 7R in hand to carry into a momentum trade on Monday. That one's going to really be good, I'm thinking, on Monday. Here's Woj with his standards. Let me get this out of the way here, sorry. Gap up and OR3 go. Quick loss. Tries to short and scratches. He's licking his wound, so he misses that one. And then he misses that one. He finally takes that for a scratch. And I can just feel him grinding his teeth. But then he says, you know what? All in a day's work, because meanwhile, Tesla, and Tesla for 3.6R. So that helps the medicine go down. Then a couple quick losses here and a scratch. Nothing in U.S. Steel, but a nice move in NVIDIA for 1.2. Does 3.2 for the day and 11.5 for the week. That's averaging 2R a day and then using 1R to cover all your expenses. Pretty good day at work. That's a 500R year with that kind of production, with a 2-week vacation. Peter, let's see. He started working on the 30-minute charts yesterday with a $10 risk for skin in the game. I'm going to say SSC caught a 2. Now, to be fair, he didn't do that until here, so he's got this one, and this is a good quick exit. I like that. This one you might have on the 30-minute, you might have even gotten out of that here instead of here. And that would have made it probably a plus 0.2 instead of a minus 0.2. But good learning. Nice work. Beautiful re-entry. Nice exit. 1.5 in Rivian. Found the mover. Quick scratching on Intel. Oh, I got that twice, sorry. So pretty good work on Peter. I wish you'd have made that decision about 3 days earlier. But there's always more coming. Just remember that that the market doesn't remember the ones you didn't take. And as it goes around the whiz wheel, waiting for you to get on, this whole thing just keeps rotating, and you can get on and ride it where you will, and there's always another opportunity coming. This is like a giant flywheel of opportunity that doesn't judge you, or it's not trying to punish you. Its job is just to turn, and your job is to feel the timing and low-risk entries and ride it while you can. And you don't got to prove anything to anybody. You just got to ride well. So nice work. Let's see. Let's go to the weekend reports. bullish normal, very strong NDX. These are the new holdings for May. Tech, Euroasia, Japan, Tech, Euroasia, Tech, European 350. These are the leaders in the stocks and the individual ETFs in the clubhouse. Intel, Apple, Microsoft, Cisco. This is old school XLK kinds of tech. That's where the juice is. I'd add Tesla to that. The exposure on ATF2 went up from 40 to 60. The risk Z is tipped into the green. We're in risk on. We're 4% above the 200-day moving average. So remember that when the 200-day moving average is here, this plus 2% and minus 2% is where you get the bear and the bull. And then this is all sideways in here. So now we're 2% above that. So we're like at plus 4.25. So this is starting to gather steam, and there's still plenty of room for the volatility before it even gets back to 1Z. So this is a very favorable sign. The RLFF daily. I'm just going to notice that the S&P is in. Well, let me put that in yellow so you can see what it is. It's on a monthly spring. That's good, and it's on a daily summer. That's very good for the long side. And this is note the rising Kata 2s, and then it broke the PSAR, made the PSAR flip. So that's a long signal. It has to get above about 415, 418-ish. But notice it's also got rising highs. So this is the all-important test right here. If we were to just draw that channel, a move to here is step 1, and then a move to here is step 2, and then if it gets through there, look where it is, back to long-term fair value. And notice the RL90 has rolled, and our old buddy, the 30-period regression line, has done this and hooked back up. That is a Kata 2 in the RL30, and that is ready to go. So this is all of the excitement of the gathering storm of the upward of movement. And again, it's got to get to here, and then to here, and then to here, and then all is well. And remember, this is, even right back in here is when the slope of the 270 was still strong. And that's where the RL90 crossed the 270. Look, when that cross happens, look what happened to price. And now follow the RL90. And it bottomed out here at the time of this Kata 2. And it gave us another strong signal this week. And the RL90 is chugging along, ready to recover back to his buddy, the 270. So this is very favorable. There's our 270 target. And here's our RL90 key turning point. And it wants to do that. And we've got the really favorable RL30 Kata 2 to help us with a little bit of statistical belief. Now, if we go back over to the conditions of our tactical, there's a ton of symbols that are all on daily summer, and these two here, XLK and NVIDIA, are on weekly summer as well. So that's the tech leaders right there. Right, XLK, NVIDIA, feeling pretty good. I'm liking it. Where if I can see Intel in there. So, there's Intel. Yeah, Intel is actually in pretty good shape too. Weekly spring, or weekly spring and daily summer. That's a good posture for Intel as well. More room to gain. So it's tech. Hits your wagon. Long train running. The 3-9 sniper. So this is the 3-day bars. All good. Broke the PSAR here. And again, all it has to do is break above here and it's long gone. The 9-day, look how solid the PSAR has been. And now the 30 period on the 9-day has broken back above. And the 10 is looking good. And it's above this crucial support. Here's the next stop at 420. All good. This is a strong chart. This is a very strong chart for short-term momentum. The 150. So now we're back on dailies. This is the 10-day, 30-day, 150-day. Here's our little 5-day and our 1-day. So this was very strong upward move, and we're really close to that peak, and it's going to be long gone. And we've come a long way in the last 120 days from this sell-off. Leg 1, leg 2, pulled back, held support. Leg 1, caught a 2, leg 2, leg 1, leg 2. This was really crucial. When this one recovered, this is where if it was going to fail, that would have been the indication. But we seem to be out of that little block, and we've had 2 really strong upward days in a row. So this was a turning point week in my view. And notice that the ETF2 asset allocation this week went from 10 to 40 last week to 60 for this week. So this is, even the ETF2 is recognizing the general healing properties of price. Check or hold. 30-day, everything looks good. 30-minute, all good, as I've said. So ETF2 portfolios. The big winners were the oversold ones down here, Latin America and real estate. And we've seen that, and this is Brazil and Mexico, really given some strong results. The easier ones to believe in is tech and the Euro-Asia globals. And those have done pretty well. Those aren't bad. When you add in the XL series, you get the XLK, which is even better than the NASDAQ. Marginally, but noticeably. Old school tech, NASDAQ tech. Yeah. I'm liking it. This XLY is dominated by Tesla, Home Depot, and Amazon. Old school family values are back, right? You add in a few country ETFs now, and regions, and a few tight sectors. And it's still, though, dominated by tech. Yeah, that's the story right now. Don't make it harder than it is. Old boring Dow 30 or large caps and a few other selected ones. There he is. What have we been talking about all week and all month? And Apple and Microsoft. I've been talking Microsoft more than Apple, to be fair. Liking it all. Who are you going to believe? Who are you going to trust? Tech. Let's see anything on there that's clever. Semis at the top of the sector list. I don't know if there was ever a no-brainer. XSD has something going for it. You know, if you wanted just a little broader exposure, just XLK. So, I mean, that's how I would sort of make my decisions. Take a look at, if I went pure semis, I get this. If I go S&P Tech, I get that. I think I favor XLK because of the shorter term acceleration. Because I want to focus on Intel plus broadly XLK. So if I get XLK conceptually, and then semis are here, XSD, but then I play the Intel portion of it because that has most of the juice, I can get exposure to XLK for broad tech, and then inside semis, I'll get the hot one, which is Intel, and I think that's the right uh, technical approach. Let's look at the ones that are getting smoked. At the bottom of the stack, based on these numbers, but notice who's making early turnarounds. Mortgage REITs, and Brazil. Brazil feels like something has been smashed, and now it's like in an SSC on the longer term. Yeah. On the other hand, look at EWW is in the top of the stack. So just inside Latin America, if you compare Brazil to Mexico, it gives you emerging markets. It gives you it's the largest economy that's still inside the emerging market index. Strong energy. Feels pretty good. I'm looking for green and white. These are now the new leaders. Oh, here's one. QQQ. Growth, Vanguard Growth. Growth Index, South Korea. Need we say more? And look what's in number 2 position. Mexico, as if you needed me to tell you that. And XLK, solid greens. So that's how you read that table. And it gives you sort of it gives you a standard assessment of the colors, a swing trade strategy. Can you turbo trade it intraday? Yeah. But especially these, and especially those at the extremes. And why should you? The winners keep winning and new leaders are emerging. And these are the ones that you can think about being short. Looking at ETF liquidity now. Based on average daily dollar volume, we're now looking at ATR percentage. Green is good for trading. Energy. Semis. Regional banks. That was 8% last week, so they're cooling off. That run is over. Gold miners. It's back to business. XOP. Oil and gas exploration. Go to the dailies. We've seen all those. Dashboard 1. We've seen all that. There are a few symbols that have been weak and are now warning, hey, just be careful, don't get too far out over your skis. But notice all of the big breakouts. That's the story. And these ones that are four-barreled, those are the ones that have made the biggest breakthroughs, and there's no resistance. So those are the ones you study. I'll let you read those. And the same thing for the ETFs. This is very broad-based relief, recovery kinds of stuff. Cues. I think it's probably to do with what's going to happen when Trump gets indicted. Or just everything get no? They just read his stuff. He acted like a buffoon, and business is normal. He's not even an interesting sideshow anymore for the markets. As long as it looks like he's going to have trouble and not become president, the market is sort of just calming down. That's what I hope happens. We'll see. That's the political impact. He's a sideshow, like a carnival barker. He's funny to listen to, but it gets old pretty quick. We'll go to the only Godzilla we have now is marijuana. So let's look at him on the daily. So the pain and suffering, yikes, smash. And now this is all stabilized, but in the last 10 days it's fallen even further, and now it has given us this little acorn at the bottom. The acorn of growth in the Godzilla. If it grows from here, what an oak tree. If it fails, look out below. I think if it was going to fail a whole lot further, it had 3 months to do it. And this is just a tactical pause to gather a little momentum to make the turn. I mean, medical marijuana, it's not even controversial or an issue anymore. So to me, this is kind of, I'm noticing with patience, leg 1, pause, leg 2, here was a pause, and the slope is getting progressively less steep. So I wouldn't be surprised to see this slowly go. I'm just going to have a sliding entry on this as this PSAR keeps coming down, like this and like this and like this. One of these days this thing is going to break through, and I'm going to trigger an entry on that, but not later than this, with about $1 stop or 50-cent stop, and I'm going to be looking for this move. So that's my Godzilla framing. If it breaks below the RL10, I'm short instantly intraday in the usual way, but I'm feeling the love for medical marijuana. Standard framing data. Only Intel in our tactical set is remaining with the 5-day volatility. And notice his index numbers. That's a fireworks right there. In the upper 3%, 3%, and 5% of those time frames. Feeling pretty good. Lots of summers. Hardly any falls. No winters in sight. So the market is healing broadly across the board. In tail of the NDX, obvious. And then finally the trading value. Here's the Intel still well represented. Tesla, marijuana, clean energy, Devon, Nvidia. Boy, is that going to go next week. And Texas Instruments in good shape too. All right, that's everything for today. Appreciate your patience, and we'll see the True Storytelling Circle in the morning. Creativity 202 Sunday morning. Swing trades tomorrow night. And back at 'em and ready to rock. Take good care.